All right. Good afternoon, ladies and gentlemen. Again, sorry for the short delay, but we will get going here. My name is Jon Randall. I'm a regional director for GoldenCare USA. I've been here 23 years. And if you haven't taken a look at the OmniFlex program by Manhattan Life, it is a great product. In fact, it's our number one selling product across the board right now. And it is really taking the short-term care, long-term care industry by storm. So today I'm just going to show you some of the basics of it. We think it's the future of short-term care and even long-term care. But let me talk a little bit about why we put it together. Manhattan Life's one of the oldest companies there is in the industry. That's 170 years old. That's good testimony to the company's enduring history and their reliability for the future. So, Manhattan Life has a wide range of products. So they're very good to work with. We've kicked out a lot of the bugs in our pre-launch, and everything is starting to run really smoothly with them. They have a great home health care plan also. But just to some of the reasons we said we really got to get a product that we can get through to our clients because people want to talk about it. But if we can't get them insured with long-term care, what do we do? In fact, right now, did you know 47% of those over 70 are declined for traditional? And almost 40% of those 66 to 69. And right now, about 3 out of 5 personal bankruptcies are because of overwhelming medical expenses. So people really need to know about short-term care, long-term care. And remember, long-term care is not obsolete. It's still a great product. There's still a lot of places for it. But we also run into a lot of health and wealth problems, and that's where the short-term care really fits. And like I said, it is transforming the industry. Right now, the issue age is 45 to 89, so going up to 89 opens it up a little bit. And unlike some of the short-term home health care plans, it goes to a lower age to start with, too. The OmniFlex has a 2-tiered simplified underwriting to allow more people to get coverage. I'll show you a little bit about that. It's kind of unique. You do get a 10% spousal discount to make it even more affordable. And I'm going to talk a little bit later, too, about why right now it's the best priced product in the industry. But the add-ons are you can add a home health care rider. You can add 5% inflation rider, and that's for the home health care and the facility. And it has a hospital indemnity that you can put in to add further value to it. It's guaranteed renewable as long as you pay your premiums. Right now, it's in 32 states, DC. We hope to get a few more across in there. And no, there is a certain few states that don't allow a lot of short-term care plans. As of now, they're not in our immediate future, but we will have some more coming here in the future. So California, Florida, New York, always really tough states to get into. So let's look at the benefit options. It's a very, very flexible product. The daily benefit, you can go anywhere from $50 to $400. Now, if a $400 benefit, if you're collecting every day on it, that's a $12,000 a month benefit you could get for the facility benefit. $12,000 a month, can you imagine that? That is like a 3-year plan that a lot of people are selling right now when they're selling the 4% or $4,000 3% compound with long-term care. And we can show you how to do it cheaper here with this plan. Elimination period, 0, 20, 60, or 90 days. I can tell you right now, we're seeing a lot of 0 and 20-day elimination periods, depending on their age and the price, and if you're trying to hit a price range. Benefit period 90, 180, 270, or 360 days. And you know what? That has restoration of benefits built into it too. So you could possibly get up to 720 days of care on the facility end of it. We are seeing some people sell the 90 or 180 days to take care of elimination for long-term care plans that are already in place. But most of our plans are going the full 360 days. Fast 50, and these are other benefits. The prescription drug benefit is built into it, and this is one of the only short-term care plans that has a prescription drug benefit. So if you were taking enough medication, you could get an extra $300 basically off your premium. $10 for generic, $25 for a brand name every time they refill their prescription. Fast 50 is also a unique benefit. Even though this is an indemnity plan that pays cash, you do have to have 2 out of 6 ADLs or cognitive impairment. And if you're using a home health care agency or going to assisted living or a facility, they'll pay you that, but the bill will come out of that money. The Fast 50 says you can take 50% of your benefit on the first day with no elimination and use that to pay your spouse, family, or friends to take care of you. If you're familiar with the cash benefit in the Mutual of Omaha, especially the old United of Omaha product where you could get up to 50% cash, that's a great benefit to have because a lot of people right away on claims just want to take care of their family member themselves. They want to be involved, and they don't want strangers in the house. So Fast 50 is a great way to get them going on that. They do have bed reservation on the OmniFlex. They will give you 10 days, and they'll do that twice in the lifetime of the policy. Restoration of benefits, if you get better and don't need care, and you're not receiving care, for 180 days, your policy will restore. And you have a home benefit, if you add that on, that can restore up to a full 2 years, and your facility benefit can store up to a full 2 years. So if you used 4 months of your benefit at home, you got better for 180 days, it would restore that 4 months back in. But you remember, you could still use it again and again until you restored another 8 months of it. So simple inflation benefit, that just says it doesn't start growing until year 6 of your policy. It's a 3% or 3% inflation. So, a 5% simple inflation. Your benefit will grow to $400 by year 25 if you started out with $200. And this is the secret sauce, basically, of why this plan, we can get it so cheap compared to the other benefits. If you see when you buy the plan, if you bought it $200, on day one, right away starting out, your benefit is $100, and it grows 20% through the 5 years until you have the full $200. And then if you have inflation, it would double again by the year 25. So if you have somebody who's going to go on claim right away, they're not doing very well, there's probably a better product to pick out. But by doing it this way, we get our premium so much cheaper. We can get really big benefits down the road. And you know what? When you're paying a whole lot less for a whole lot more and protecting the company at the same time, it's a win-win-win. So that's basically, again, the secret sauce of this policy. So if you started out with a $400 base benefit, right off the bat, if you went in, you'd get $200. We did comparisons against most of the other short-term care plans out there, and by year 3, we're equal to most of them, and by year 5, we're beating all of them. So that's a way we're going to protect our premiums and also protect the company. The optional home health care rider, that one goes from $50 to $300. So if you did the full $300, you'd have a $9,000 a month benefit if you were using it every day. We are seeing most people, because this is the rider, put a 0-day elimination on it. It's pretty cheap to add this a full $300 at 0 days to most of your clients. But it does have 20, 60, and 90-day eliminations. There is a benefit period of 90, 180, 270, and 360 again. And this is its own pool of money, and it will restore up to 2 times. And I want to make sure you see that it's non-medical homemaker services that can be covered for that full 360 days. Even a company like Touching Angels that basically just comes and visits, maybe watches TV or plays cards with you, maybe picks up groceries, but it even covers those type of services. There is a optional hospital indemnity rider, $50 to $300, and you can get that to pay for 3, 6, or 20 days, and it has a lifetime maximum of 180 days of care, which is a pretty good pool of money there at the end. I'll give a couple quick examples here. Anthony's goal was to age in place his home as he and his spouse for 40 years have loved. Planning ahead to accomplish his goal, he purchased an OmniFlex plan that included a $280 a day benefit for both base and home health care, a 360-day home health care rider, and 5% simple inflation. He really liked the Fast 50 so he could get help from his friends, family, and spouse. He owned the OmniFlex for 10 years before his health changed. Due to the inflation benefit, it had grown to $350, and he was really pleased to learn the first day he could start collecting $175 per day for his spouse to take care of him. His spouse provided the informal care, and he collected it, which began immediately and can be used the way the family wanted. After 6 months, he recovered. His policy had paid a total of $31,000 in Fast 50 cash, and it allowed Anthony to recover at home with care by a caregiver of his own choice. He still had 6 months remaining in his benefit period, and better yet, if he fully recovered, he has a peace of mind that knows it's going to restore those full benefits. So I'm just kind of reading these claims. Here's a shorter one from Julie. She knew she had to plan ahead. She was on fixed income and assets, but she knew there'd be a big risk if she ever needed care. She wanted care for in-home care as well as assisted living and nursing home. At 76, she was really worried about securing an insurance policy that would provide benefits for facility and home care. She learned that OmniFlex, she could purchase paying $200 daily benefit, again for both facility and home. And at 83, Julie needed assistance with her daily living. She was collecting her $200 per day and able to remain at home, as the home health care benefits were included in her policy. So here's all the questions that are the knockout questions. Basically, if you answer yes to one of these, you're not eligible to coverage. So the first one has to do with AIDS. The second one, if you're already on disability, prior prior to age 65, you're not going to get it, or disabled. If you're currently receiving supervision already on your activities of daily living, if you're receiving home health care coverage or nursing home or assisted living, and then the big knockouts, if you have Alzheimer's, dementia, Parkinson's. Now remember, Parkinson's is stage 4 or 5. Huntington's or a cognitive impairment. Or if you're receiving medical professional for diabetic complications like neuropathy, retinopathy, kidney disease or failure, renal insufficiency, and kidney dialysis. Now remember, all of those are going along with being diabetic. So it's a combination. If the diabetes is what's causing this, that's the knockout. Or if you have tests or surgeries that have not yet been performed, and in the last 24 months, have you been prescribed medications for any of the following? Cancer, leukemia, lymphoma, malignant melanoma, or cancer that spread from its original site. So not very many knockouts that knock you right out of it. Here's the second part, and this just allows you to get the limited benefit or tier 1 plan, or the tier 1. So that is limited to $100 a day for both the home health and the facility, and you can't put the inflation rider on. But you know what? There's a lot of sick people that this is still going to cover, and especially when you have a couple, if they can both get some kind of coverage, you're more likely to close that sale. So in the past 2 years, have you been diagnosed or received treatment for TIA, congestive heart failure, organ transplant? That's in the last 2 years. It doesn't say 3 years ago, so answer the questions just like it says. Diabetics that require more than 50 units of insulin and are on more than 2 oral and 1 injection. It doesn't mean they're a knockout, just means they can't get the big plan, the full plan. Systematic lupus, Lou Gehrig's, cerebral palsy, MD, alcohol or substance abuse, all of those are, again, knocking you out of the top plan. Amputation caused by a disease, and COPD, and the things that go along with those, with use of oxygen or other chronic liver disease. So you can still get a plan. Like I said in the slide earlier, Parkinson's stage 1 and 2, you can still get a plan with this. So the cash benefit, again, remember, it's an indemnity plan. So there's how your plan looks when you're signing up for it. You can pay up to $12,000 a month with 5% simple. That's going to double. Basically, you can get $108,000 right out of that. When you add the benefits together, you can get $504,000 with the restoration, and with the projected lifetime coverage, that would come to a little over $1 million. I'm just trying to keep us in time here. So you can take a closer look at that when we send the slides out to you. Remember, the monthly benefits start at 50% of your maximum. It takes 5 years to reach full maturation. So example of the maturation of this plan, during year 1, the benefit could be $200 daily or $6,000 a month. You go to after year 1, it's 60% is available. So $240 daily or $7,200 monthly. Year 3, $280 or $84 monthly. Year 4, 320 daily, or 9,600 a month. You can see where it's getting really strong already. Year 5, 306 daily, up to 10,800 a month. And in maturation at year 6, $400 a day and 12,000 a month. And if you, of course, put 5% simple, it would start growing from there until it doubled. Now, the cash benefit works the same way as the other one. You're going to get that prescription drug payout of $10 or $25 up to a maximum of $300. You have bed reservation and restoration of benefits. Those are all included in your program right there. The optional benefits, hospital indemnity, and of course the home health care rider. How to submit an RX claim? There's a nice little claim form here, or a faster, easy way is on filing a claim. It's just doing it online or with the barcode. And that's all there is today. I know there's some questions again. I hope you see the importance of this program. Please give us a call at 800-842-7799. It's 800-842-7799, so we can get you some more information in your hands. Be on the lookout for the email. It'll come out tomorrow or Monday with the slides and some more information on the OmniFlex program. I don't want you to miss out on this plan. If you're not selling it, take a look at it, especially if you sell in multiple states. Like I said, it's our #1 selling product for a reason. Flexibility and the pricing. When people can get a plan at a lower price, they love that. When we can get more people covered. So make sure you're not missing out on this boat. If you're in a different market besides the short-term, long-term care, it's a great additional sale to ask. All you have to do is get the word out there and say, what is your plan, in case you need a long-term care or extended care situation. Everybody have a wonderful day. I hope you pulled something out of this today, and I'm glad I didn't have a coughing attack. So thanks, everybody. Enjoy your day and have a great weekend. And again, feel free to give us a call.
GoldenCare is always here to serve you with new tools, new products, new ideas, and new innovations, and always the best support in the business to help you succeed. So give us a call at 800-842-7799 and check out our website at www.goldencareagent.com.